Welcome to the official video overview for the initial public offering of CMR Green Technologies Limited. We are India's leading non-ferrous metal recycler in terms of installed capacity as of 31st March 2025 and revenue from operations for the fiscal 2025 as per ICRA report. This video is not for distribution outside India and is directed at and is intended for distribution to and used by citizens of India residing in India only. You are viewing this video on the basis that you have confirmed your representation, agreement and acknowledgement to the book running lead managers and the company that you are the intended recipient of this video and you are located in India. If you are not permitted to view this video or are in any doubt as to whether you are permitted to view this video, please exit this video. Caution. Investors are advised not to rely on any other document, content or information provided in respect to the public offer on the internet, online, websites, social media platforms, microblogging platforms, and by influencers, finfluencers. Investors are advised to rely only on the information contained in the offer document for making investment decision. Investors are advised to read the draft red herring prospectus dated August 29, 2025 carefully before taking an investment decision on the offer. CMR Green Technologies Limited offer comprises the total offer size, which is completely offer for sale, of up to 42,890,735 equity shares of face value of 2 rupees each. The company was incorporated on August 23, 2005, and its registered and corporate office is located at L&T Business Park, Delhi Mathura Road, Faridabad, Haryana, India. We process, manufacture, and sell aluminium alloys in liquid form, ingot and billet, zinc alloy ingots, and segregated furnace-ready scrap of stainless steel, copper, brass, zinc, lead, and magnesium, amongst others. Our company also produces aluminium billets that cater to both automotive and non-automotive sectors. We recycle used beverage cans, scrap for fulfilling new metal requirements of primary producers. Due to the large economic, environmental, and social advantages of recycling and the disadvantages of mining, primary producers across the world are shifting to develop new sources of recycled metal. As per ICRA report, CMR Green Technologies Limited has a capacity advantage over domestic players, with an installed capacity of around 4 times of the nearest competitor in the domestic recycled aluminium space. As of March 31, 2025, the company ranked among the largest players in the global aluminium recycling industry in terms of installed capacity. As of 31 March 2025, we also hold the leading position in India's liquid aluminium market, ranking as the largest supplier by turnover in fiscal 2025. In India, the supply of liquid aluminium is limited to only a select group of players, owing to the high technical expertise, infrastructure, and operational precision required in this space. In order to ensure quality and timely delivery, we have made investments in manpower, supply chain, logistics, information technology, process controls, and plant and machinery, including our patented technologies for safe transportation. We are a customer-centric company, constantly striving to create value for our customers through products offered and committed deliveries. We have long-standing relationships with Tier 1 auto component suppliers, Tier 1 companies, and original equipment manufacturers, OEMs, and channel partners customers ranging from 16 years to more than 19 years. We operate through our 13 strategically located recycling facilities. As on June 30, 2025, our recycling facilities are operating with a combined actual production capacity of 605,850 MT, as per ICRA report. We have the 6th highest score as per S&P Global Corporate Sustainability Assessment score amongst the companies in the aluminium industry, scored by S&P Global. We believe we have contributed significantly to reducing carbon footprint, environmental degradation, and challenges like resettlement and rehabilitation by reducing the incidence of mining in the country. Based on our sales volume, we have saved 863.89 million metric tons of carbon dioxide emissions during the fiscal 2025. Investors should note the important risks, such as we depend on a limited number of customers for significant portions of our revenues. For fiscal 2025, 22.98% of our consolidated revenue from operations was derived from our top 3 customers, and 35.01% was contributed by our top 5 customers. The loss of one or more of our top customers, or significant reduction in production and sales of or demand for our production from our significant customers, may adversely affect our business, financial condition, result of operations, and cash flows. We derive a substantial portion of our revenue from the sale of key products such as liquid aluminium alloys and ingots, contributing 78.42%, 76.95%, and 73.13% of operations revenue in fiscal 2025, 2024, and 2023, respectively, and any loss of sales due to reduction in demand for these products could adversely affect our business, financial condition, results of operations, and cash flows. In addition, we may not be able to diversify into new product lines, which may adversely affect our business, revenue from operations, cash flows, and financial condition. We do not have firm commitment long-term agreements with our customers. If our customers choose not to source their requirements from us or manufacture such products in-house, our business, cash flows, and results of operations may be adversely affected. We depend heavily on automotive customers and the sector's performance in India and overseas. A loss of or a significant decrease in business from these customers, or a change in the preference of alloys used in the automotive industry, or any adverse changes in the conditions affecting this sector can adversely impact our business, results of operations, cash flows, and financial condition. Conflicts of interest may arise out of common business objects shared by our company and some of our group companies. Additionally, our promoters may have in the past been associated with other companies which may have similar names and may be in the same line of business as that of our company. Please read the section titled Risk Factors, beginning on page 44 of the DRHP for further information. Mohan Agrawal, Pratibha Agrawal, Akshay Agrawal, and Raghav Agrawal are the promoters of our company. Our promoters collectively hold 182,015,759 equity shares, representing 83.10% of the issued, subscribed, and paid-up equity share capital of our company. 59.75% of the company is held by the selling shareholding, who are selling up to 42,890,735 equity shares of the pre-issue capital as part of the offer for sale. For details, see section titled Summary of the Offer Document on page 25 of the DRHP. Our board comprises 8 directors, including 3 hold-time directors, 1 non-executive nominee director, and 4 independent directors, including 1 woman independent director. Our revenue from operations increased to Rs 66,664.85 million in fiscal 2025 from Rs 59,524.42 million in fiscal 2024 and Rs 58,685.07 million in fiscal 2023. Our EBITDA improved significantly, rising to 3,037.17 million rupees in fiscal 2025 compared to Rs 2,174.04 million in fiscal 2024 and Rs 2,070.14 million in fiscal 2023. Investors are advised to refer to the DRHP beginning from page 338 for further details on financial information. A summary of outstanding litigation proceedings involving our company, subsidiaries, directors, group companies, promoters, key managerial personnel, and senior management is provided below. For further details, see outstanding litigation and other material developments on page 485 of the DRHP. The objects of the offer are to achieve the benefits of listing the equity shares on the stock exchanges and carry out the offer for sale of up to 42,890,735 equity shares of face value of 2 rupees each by the selling shareholders. For further details, see the offer and objects of the offer on pages 95 and 130, respectively. IPO will be conducted through the book building process with allotment of not more than 50% of that offer to QIBs, not less than 15% of the offer to non-institutional bidders, and not less than 35% of the offer to retail individual bidders. The equity shares are proposed to be listed on the main board of BSE and NSE. Equirus Capital Private Limited, ICICI Securities Limited, and Motilal Oswal Investment Advisors Limited are the book-running lead managers. Investments in equity and equity-related securities involve a degree of risk, and investors should not invest any funds in the offer unless they can afford to take the risk of losing their entire investment. Please read the draft red herring prospectus dated August 29, 2025, and any corrigendum and addendum thereto before taking an investment decision in the offer. Neither the company nor the selling shareholders are seeking an investment from you based on this video. This is a video for information purposes only and is not a promotional video and does not constitute an invitation or offer to acquire, purchase, or subscribe to the equity shares of the company. Potential investors should wait for the red herring prospectus to be filed in relation to the offer for making any investment decision.